students. In this video, we will see partnership accounting, dissolution of partnership firm, which is the last chapter of partnership accounting. Okay, so you already know that this year ISC has removed the, the preparation of partners loan account from the chapter retirement of partner. Okay, so we don't have to prepare partners loan account, but here in dissolution of partnership firm we may have to prepare, okay, which is very easy. It is very simple. Okay, so I will just skip all these theoretical portions. Okay, I already have provided you the PDF, so just go through this, okay, PDF, and this is more than enough for you to understand the concept of dissolution. Okay, so on time of dissolution, we prepare mainly three accounts as per the question, okay, that is mentioned. Sometimes we have to prepare all these four accounts also. Okay, so normally we prepare realization account, partners capital account, and bank or cash account. Okay, sometimes we have to prepare partners loan account also. So how to prepare partners loan account? This is the format. Okay, so uh, whatever be the partner's loan, okay, so the balance will come up here and towards the credit side, and the amount that is paid to the partner for his advance or loan, okay, which is very simple. So we already know how to prepare these items. Okay, so I'm just skipping from the discussion. So this is our main account. Okay, this is called your realization account. So this is our main thing in terms of dissolution of partnership accounting. Okay, so we already know how to prepare other types of accounts. So I will focus in this video only in realization account. Okay, how to prepare realization account. Okay, so see, as you can see here on the screen, that realization account is prepared actually from the balance sheet. Okay, this is the balance sheet given in question. Okay, so whatever the items from liabilities are there, okay, so it will come up towards the credit side, because liabilities, they have the credit nature. Okay, they are nominal account. Okay, and assets, they have the nature of debit, the, as they are real account. Okay, so from liabilities side, external liabilities, okay, external liabilities will come up here. Okay, excluding internal liability. So internal liability is partner's loan. Okay, but external liabilities includes your sundry creditors. Okay, uh, long-term loan, long-term or short-term loan taken from someone else. Okay, so even loan taken from partners, relatives are also treated as external loan. Okay, and bills payable. Okay, all these are your liabilities. And remember that bank overdraft is also a liability, but bank overdraft will not come in the realization account. Okay, we include that bank overdraft in the bank account. Okay, so from this asset side, okay, from this asset column, uh, items like cash and cash equivalents, uh, like bank, okay, or cash or marketable securities, they do not come up here, okay, in the debit side of your realization account. Okay, and after we write down all these items from the balance sheet, okay, just you have to just copy it from here. Okay, from the balance sheet you just have to copy down whatever the items are there to appear in realization account. Just note them down here. Okay, and the figures, whatever the figures are there, okay, just put it down here. Okay, and from the liability side also. Okay, now after that, what happens is that all these assets which you have extracted from the balance sheet will be now realized. So whenever you talk about this assets realized, it means actually assets sold. Okay, so whatever the sale proceeds are there. Okay, by sale proceeds we mean the amount that is realized, or that is obtained by selling those assets. Okay, so we will write here in the bank column, in the credit side, okay, under this bank head, okay. So we write the amount here, okay, and if any asset is taken over by partner, so we have to write the partner's capital account. In bracket, you write stock taken over or any form of asset taken over, okay. So after that, you write in the debit side about this thing that is called to bank account bracket liabilities paid. Okay. So whenever you pay the liability, it will come up here. If in the question nothing is mentioned about the liability, okay, if the question is silent about the liability, then it will be assumed that the liability is paid to the full amount. Okay. For example, in this particular question, okay, it is just an example. For example, in this particular question, if the question was silent about sundry creditors, so it means by default that sundry creditors were paid in full, that is 80,000. Okay, so the amounts that can be uh, changed here, okay, depending upon the question. So you have to follow the question. Like here in this example, you can see that furniture are realized for rupees 2 lakh, whereas the full value of furniture was 2 lakh 20,000, and debtors were 27,000, and here 27,000 is now realized. So the full value can be realized, and sometimes the value realized can be more or less than the actual book value of assets. Okay, and and similarly, the liabilities can be paid in full, or sometimes the liability can be paid in discount also. Okay, so if the difference appears in the credit side, it is the loss on realization, and if the difference or balance comes here in the debit side, it will be the profit on realization. And whatever is the profit or loss on realization will be shared between the partners as per their profit sharing ratio. Okay, in this chapter, we don't have to worry about old ratio, new ratio, and sacrificing ratio or gaining ratio. Whatever is the ratio given in the question, that is only the ultimate ratio, and we have to share whatever be the profit or general reserve, okay, as per the given ratio in the question. So remember that whenever you transfer the items from balance sheet to realization account, these items will not appear. Okay, number one, from liabilities column. Okay, so from liabilities column, you must remember that these items will not appear. Number one, general reserve. Number two, workman compensation reserve. Okay, profit and loss account. If it is the credit balance, it will appear in the liabilities column, isn't it? And capital account or current accounts of partners. Okay, so which will be in the liabilities column. Now from assets column, uh, bank, cash, if there is profit and loss account, okay, debit balance, and if sometimes if there is debit balance of capital or current account of partners, then it will appear in the asset column, right? So all these items will not appear in the uh, realization account. Okay, so there is one more thing, that is your investment fluctuation reserve. Okay, so what to do with that item? Okay, so I will let you know when the question it comes up. Okay, related to that, I will explain you when the question will be solved. Okay, in the next video. So please go through this realization account one more time, because it may be quite confusing in the beginning, but I tell you that this is the most easiest chapter in partnership accounting. Okay.